For ASEAN, which, second quarter kind of broadly a little bit weaker, though, there have been some bright spots, and Vietnam is one that you do like.
Yeah, the fact is that when we look at Vietnam, I think that's one of the sort of, markets that, we can still kind of call it an untapped market to some extent. The fact is that when we look at overall year-to-date performance, the Vietnam market has performed very well. In particular, when you look at it from a valuation perspective, it's still one standard deviation below its historical averages. When you look at it across the spectrum, across Southeast Asian countries, the fact is that, the Vietnam market is growing quite drastically over the past few years. We are definitely seeing more stocks going through the IPO processes, more investors going in to invest in the market. While still, yes, when we look at overall, emerging market or Asia regional funds are still, very underinvested in the country, being a frontier market at less than 1% of overall holdings. The fact is that with the various fiscal policies as well as very lenient monetary policies, we do see quite a bit of benefits coming through with Vietnam.
And you're not discounting, are we sort of running the risk of throwing out all China opportunities out with the bathwater at this point?
No, the fact is that we see this as a good opportunity for investors when it comes to, looking at China. We know that for a fact that in short term there is still going to be some volatility, but overall, we still expect to see GDP growth to come in roughly about 5%, for the year. We expect to see further stimulus to help really strengthen the economy. And overall, when we look at manufacturing activities, I think that's also going to be key, Heidi. The fact is that when we look at overall PMIs, we see potentially an uptrend happening, but I think more importantly as well, we think that PPI has bottomed at that 4% level. So, with any modest increase in the PPI levels in China, we expect to see a pickup in manufacturing activities, which is going to be a very strong boost for the overall Chinese economy during the remainder of this year.
And the notion that the U.S. economy might have had a soft landing, that the economy is doing well, is it a hard sell for you to sell Asian equities, for example, because that group of stocks just keeps outperforming and keeps delivering earnings?
Well, not necessarily. The fact is that when you look at overall valuation, and we know this, we've been talking about this quite a while now. The fact is that overall U.S. stock markets valuations are significantly higher than Asia. And, looking at where we are right now in that interest rate hike cycle and looking at Fed fund futures and so forth, expectations potentially is for the dollar to maybe start to weaken, especially if interest rates starts to lower, let's say, sometime next year. And if that's the case, you might actually see some of the capital, flowing out of the U.S. market and to some of the markets here in Asia, which are definitely much more interesting from a valuation process.
Yeah, I know your market's got an eco, but is it a good assumption to make that the Fed's done?
Oh, it's tough to say, right? I don't have that crystal ball to say whether or not, we have one more time, sort of in terms of the interest rate hike cycle. But I think we're closer to the top than ever before, I think. So I think from that standpoint, there are definitely opportunities, not necessarily maybe not for the remainder of this year, but we're close to 2024. And, if we do get that let's say, weakening of the U.S. dollar, that does potentially bode well for some of the Asian markets.